Welcome back. Arlen Suderman and Jim McCormick joining us for markets. Well, the big news, USDA's reports out on Friday. USDA raising the national corn yield to 177.3 bushels per acre in the January report. That's a new national record yield, but that's also a big jump from November when USDA had the national yield penciled in at 174.9 bushels per acre. Now, USDA did cut harvested acreage, but we're still looking at 2023 corn production figure of 15.34 billion bushels. Before we get into soybeans, Arlen, that is a massive jump from this November report and more than what the trade expected.
Yeah, it really is. And we got a lot of criticism for our estimate all summer long being too high, and we ended up too low. This crop just really impressed, not just the genetics of it, but farmers with their technology, the seed placement, just the management of it are getting better and better at withstanding these stresses. And it just makes you wonder how good this crop might have been had we not had the stresses we had.
Absolutely. And Jim, looking at the demand front, did USDA make any major revisions to corn demand?
Well, they did increase the F. They did do a few slight of revisions up, Tyne, and I think that was pretty much in line. And I guess it's a good thing that they did, because without those upward revisions of demand, this carryout would have really exploded to the upside. And I think the market would even have an even worse negative reaction than it's currently having.
Absolutely. But USDA also increasing the national soybean yield to 50.6 bushels per acre. That's up from the 49.9 in November. Soybean production now pegged at 4.16 billion bushels. I mean, you look at even the resilience of the soybean crop this year, Arlen. What is the biggest takeaway for soybeans from this week's report?
Yeah, the same genetics we plant here, we plant in South America as well, essentially so. And so we need to look at South America in that same light. This crop really did well, especially in the eastern Midwest. We saw some really good yields from corn and soybeans this year. And some of that may have been some of the benefits from the smoke coming from the Canadian fires. That's one of the theories now, with sulfur and some other positive effects coming from that smoke.
Yeah, and Jim, when you look at South America, like Arlen mentioned, USDA did revise its estimate there, cutting soybeans to 157 million metric tons. That's down from 161. Also cutting the Brazilian corn estimate by 2 million metric tons. I mean, were those in line with expectations, or did we think that we were going to see bigger cuts from USDA in this report?
Trade is looking for bigger cuts at the time. The rhetoric, I think, was even for bigger cuts than what the average trade guess was. So, yeah, it was definitely a little bit disappointing, but we've got, time will tell where we're at. I mean, some of the modeling I've seen for the weather is we are going to turn a little bit warmer, drier here in the middle part of January. And with as late as this bean crop has been planted, that could cause some problems to that crop and still shrink it. And of course, we still even started planting that safrinha corn crop. So the size of that crop is yet to be determined.
Okay, we're getting early yield reports from Brazil. Arlen, what are you hearing?
Well, the first soybeans are lower yields, as we would expect, because those are the stressed soybeans. Those are the early planted that went through the most stress. So those are lower, and then we anticipate those yields are going to start coming back up. We still do expect the production estimates to continue to decline as we go forward in South America. The biggest question is, will it decline enough to justify rationing U.S. demand with higher prices? In other words, to send the world back here for our tighter supplies. And at this point, we don't have evidence that it's going to fall to that level yet.
Jim, the markets trade did not like this report. We're seeing some lower commodity prices. Did the markets react like you would expect it to, considering these changes from USDA?
Well, I think a lot of the trade time was hoping for maybe a little bit of a slightly bearish reaction and then kind of a rebound at it. This report, in my opinion, was definitely kind of shocked people, especially on that yield. I think the trade in general was really kind of brace and think the rhetoric was the crop is going to get a little bit smaller. And we've got to digest this kind of report, but, it is a 3-day weekend. Hopefully that once we come out of this weekend, the market will kind of take a breather and try to come back up a little bit. But right now, it's a typical USDA report. They threw a lot of numbers at us. They were bearish. The QB readers are running with it. And right now they're running to the downside.
Well, we haven't even gotten through all of the numbers from USDA. We'll look at wheat and then look at this cold weather impact on cattle. We'll do that when we come back.